The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day so you can stay up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and anything shared in our content should not be construed as financial advice.
I do have some trades on. I am long Aussie CAD.
For these positions, I wouldn't mind holding them for 3 months.
So around 100.5 to 99.5 in that sort of area.
Pulver alerts, I have 100 shares at 11.79. I closed out today.
Start building your strategy based upon historical data.
Welcome to A1 Trading.
Good morning, everybody. Welcome back to another live stream. It's October, so that means it's spooky season, and also fancy coffees from Starbucks. What's the pumpkin spice lattes and all that stuff? I've never been a big fancy coffee person or a Starbucks person, but you know, it's the holiday season, or the I suppose the spooky season, autumn season. Hope everybody's doing well. We've got nothing today in terms of the U.S. jobs report. We do, however, have Canadian jobs data coming out this morning, I believe. We had initially scheduled this stream here today to potentially be a tentative NFP stream, but it does look like that has been postponed once more. So we are looking at just Canadian employment data, as well as the University of Michigan's consumer sentiment and inflation expectations. These things actually are probably the most potentially moving data points of the day. So we'll see. Yeah, so we've got, I know it's in the title, live trading NFP. Sorry about that. We're fighting this whole government shutdown thing as well, trying to figure out when that data point is going to come out. It looks like we may just bypass it completely for September, which is, you know, a little frustrating, but hey, what are you going to do? How's the COT data looking? Well, just like the NFP report and unemployment claims data has been postponed, so too has the CFTC's commitment of traders report. So we are in the blind here, guys, on a lot of stuff, but not all stuff. We do still have things to look at. For example, we can still look at crowd sentiment. I'm curious. I don't know. I like the new put to call ratio look quite a bit. Okay, so just taking a look here at the put to call ratio, we can see S&P 500 still sitting near those all-time highs. Crowd sentiment is a little bit back to neutral. The last few days, we've had these bouts, spikes in both directions, where you've had high amounts of calls, high amounts of puts. Crowd sentiment on the options flow, really mixed back and forth. And yeah. Interesting. Let's see. What else do we have? In terms of top setups today, S&P 500, Nasdaq, Dow Jones, all the indices still getting bullish ratings. We're still getting dollar CAD bullish ratings as well. So dollar continues to sort of be a favorite of the EdgeFinder. I am still long the US dollar. I have a DXY play going on, specifically through the ETF UUP. So I can pull that one up. This trade's gone really well so far. The idea that I have is I think that the dollar index has more upside to go. If we take a look at DXY on the daily chart, what we're looking at here is essentially we've had this break through these highs around the 98.60 level. Now price breaking through that area with some decisive close yesterday. We could be due for a bit of a pullback, but I would be looking for dollar bullishness to stay there if you did get a pullback into the 98.60 level. Should we buy gold, Nick? You should. I know I say this every time, but I get these comments all the time. Should we do this? Should we do that? Should I buy this? Should I sell that? If you want to stay in this game the long term, you got to be finding the answers to these things yourself through research and back testing and hard work. Because if you're asking me about it, and let's say I do have a bias. Let's just say I think I want to buy gold or sell gold. Like, if that's my takeaway, but you don't understand how I came to that conclusion, it doesn't really do you any good. Because again, nobody knows with certainty. Like, even if I feel very strongly about a direction of a market, I wouldn't say I have a more than 60% chance of calling that correctly. So be careful. It is tempting to go into someone's YouTube channel like mine and be like, hey, they've got a bunch of followers. They've been doing this for a long time. Certainly they know what gold's going to do, right? The answer is no. Great traders don't know what the market's going to do. They just adapt to what the market is doing and manage risk when they're wrong. Anyways, with gold in mind, what is my thoughts on it? Well, gold's been in a monster upward trend. Yesterday, you had your first red day in quite some time. I don't think it really means a whole lot unless, again, we've been getting used to just gold going up every single day. So yesterday I saw a lot of people freaking out. Oh my gosh, gold is going to crash. Here's the thing, right? This is just a red day. We just haven't had one in a while. So people are like, what is going on? I had people commenting all over, gold is crashing. Gold is crashing where? Where do you see a crash on this? I get it. I know I know that if you looked at the 15-minute chart, oh my gosh. But you got to keep context in mind. We are still in a very strong upward trend in gold. And if I'm looking at this, you're still in upward trend, even if gold prices fall to 3,800, 3,650. I know that sounds like a crash if you're trading the intraday, but on a big picture, that's just a healthy pullback. In fact, I actually would love to see gold pull back down to 3,800, 3,600. These are bullish pullback areas, in my opinion. Do I think gold has room to do this kind of move? I do. I do think gold has room to pull back. Am I betting on it? No. I know this can be a little bit cryptic, a little confusing, but the answer is always going to be, I come back to my software because my software keeps it really simple. Currently, when I look at gold, if I go neutral readings and I add in specifically metals, what I can see is gold is giving me a neutral reading currently. So what that means is, do I want to buy a neutral reading? No. Do I want to sell a neutral reading? No. Why are we getting a neutral reading? The score is not very directional, meaning it's kind of mixed. Why is it mixed? Well, technicals look bullish, but economic data looks mixed to negative for gold. And sentiment score is showing perhaps a lot of call volume, right? We use the put to call ratio as our gauge for market sentiment when it comes to gold. Check this out. If I pull up gold, you can see what's going on here. See how this reading is really low? That's telling us the crowd is buying calls like crazy. So what I just did, I pulled up this output summary, but the EdgeFinder is digging through all this data. It's looking at sentiment data. It's looking at technical data. It's looking at economic data. And it's telling me there's nothing to do with gold. Again, you might have a different system or strategy than me. And I'm not a supremacist when it comes to the EdgeFinder. I recognize there's people who have different styles, different trading strategies, different approaches. But if you're coming to my stream here, I'm going to be completely real with you on what I am finding within the markets. Gold and silver are neutral on my system, which is the red light, green light to me to find potential trade setups. So technically, do I think we are bullish? Yes. Do I think we could also pull back? Sure. So I know that, it's not a very exciting synopsis. I know it's more exciting when I come on here and I say gold is bullish because this, and this, or gold is bearish because this, and this. But all I can do on my channel is be authentic and real about my trading. There are times where there's just nothing to do. And I think that for now, that's okay. With gold, I'm going to sit out on this craziness that's going on. Thing melting up every single day. It's fantastic if you're long and trailing a stops. A lot of people are shorting it and getting really wrecked on the gold price movement. So be careful out there. For me, I have no strong bias on gold or silver at this time. I would like it a lot more if it were to pull back and then I look at the EdgeFinder and get a bullish reading. There's probably a trade there for me. But EdgeFinder is my confirmation system. It's looking at a lot of data so that I don't have to. That's the whole point, right? Be Somebody FX. What's up, my friend? Good to see you in here. Is it true that there's no NFP today? That's correct. Yeah, no, I know the title says live trading NFP. We schedule these streams in advance. The producers do behind the scenes, and we threw this out there. That title is it's off just because, again, we postponed it initially. There was a expectation that we might get it this Friday, but because of the government shutdown, BLS is still postponing, putting back delivery of those NFP numbers. So we're it's very possible that we just get skipped on September. So again, stay systematic. You can read 1,000 news articles. You can watch 1 million videos on what's going on. To me, the reason I use the EdgeFinder is because I don't want too many chefs in the kitchen, if that makes sense. I just want a system that looks at the data and generates an output. Now I can go dig deeper if I want to understand why is it getting a sentiment score of -2? Why is it getting economic data? Sure, I can look at that. We talk about frequently the economic heat map, for example. Pull up this data and we can see why gold and silver are getting not great macro scores based on the US data. Why? Well, take a look. GDP growth came in really strong in Q2, 3.8% compared to forecasts of 3.3%. Manufacturing PMIs came in better than expected at 49.1 compared to forecasts of 49. These are both bullish for the dollar and not particularly attractive for gold. Retail sales in September, I know it's been a little bit of a time since we've had a latest report. I think we're going to get one soon. Retail sales month over month beat expectations. That's bullish for the dollar. The producer price index was a little soft. That's bullish for gold, bearish for dollar. But the overall absolute value of inflation in the U.S. is still above trend, above target, I should say, around the high twos. That is still sticky inflation, which favors the interest rates not being cut as many times as perhaps what people are thinking or hoping for. Wage growth is still above inflation. That is actually a positive for the economy, right? Wages outpacing inflation is good for the consumer. We also have unemployment rates still at historically pretty low levels at 4.3%. So my point is, if you want to go buy gold because the world's falling apart, we're just not seeing that in the macro right now. There are some things that are not great, like jobs data, ADP, non-farm payroll. Like the latest data that we have on this is not particularly great, but remember that we have to look at this thing as a collective. If you're going to be a macro trader, you can't pick and choose what you want to look at. This is why we use software for this. We use software because software doesn't care to build a bias based on emotions or feelings or what you want to happen. It just looks at the data and tells us what it finds, right? So when we look at the data, we are generally finding a mixed to positive view for the US dollar. When we compare that to its peers, we can pull up the economic surprise meter. What we see is that the dollar actually has a relatively upbeat data points coming out relative to forecasts when compared to the British pound, the euro, the Japanese yen, the Swiss franc. The dollar looks relatively attractive. Hence, the conclusion is I've been bullish on the dollar, right? So do I like gold for the long term? I definitely do. If you've been watching my channel for any amount of time, in the big picture, I'm a huge gold bull, silver bull. I really like silver quite a bit. I own some longer term in other portfolios as well as in physical silver. So again, I think that there's a lot of upside for gold and silver in the big picture. But I think in the short term, I wouldn't be surprised if you got pullbacks, or if even in the next, 6 months, gold and silver are not too far from where they currently trade. I wouldn't be surprised by that. You've had a massive surge. Could it keep going? Totally could. But for me, where's the risk reward on silver? I just don't have something I can do here. I can't buy this. I can't sell this. I know that's a boring answer. I know it's a long drawn out answer, but understanding when it's right to be bullish or bearish for me means understanding the full picture. When we look at stocks still look good to me on pullbacks. We're a little stretched here. Price has been just in a one directional upward trend. I would love to see a slide in stock prices. Stock indices, the S&P 500 pulled back. The overall story for stocks in the US actually looks quite good. If I look at the US economic heat map through the lens of stocks, check out this far right column, and what we can see is a majority of our indicators actually suggest the macro looks okay for stocks. Why? Well, GDP growth is good for companies. PMIs coming in, anything better than expected is always considered a more positive thing for the state of the economy, right? Strong PMIs suggest forward-looking guidance that is positive for stocks, or for, I should say, for the manufacturing component of the economy or services component of the economy. These things are good for stocks. Inflation is well, PPI came in soft. This was a good print. We do have new inflation data that is scheduled to come out, but with the government shutdown still going on, we could get delayed on a CPI print as well. But yeah, waiting for a pullback in the S&P 500 too. Seasonality this month and the next is as good as it gets, so that will make dips attractive. I'm with you on that. Let's pull up some data on that, because again, we take a look at the S&P 500. You've got something interesting taking place here. We have had a really strong surge in the year-to-date performance of the stock market ever since the April sell-off. But to your point, Be Somebody FX has got it in the chat here. Take a look at that end-of-the-year seasonality. The last 10 years, we're going into what is usually, I saw Forex James also do this. He was using the EdgeFinder and talking about this as well. Seasonality is very clear here. You probably don't want to fight this. Now, let me be very clear. Does that guarantee that the stock market goes higher from here for the rest of the year? No. Take a look at 2018. Take your pick. There are years where you can take a look at seasonality and say, well, seasonality was wrong. Nothing's right all the time. But if we look at the stock market on the last 10-year average basis, that's what this is doing for you. It's showing you the average historical performance of the S&P 500. We can see that there's typically a drive higher into year end. Not every year, but on average. So this is factored into the scoring, right? So the EdgeFinder looks at that, and that is part of the top setups page. If we go to seasonality for the S&P 500, so here's SPX. Let's take a look at seasonality, and you can see that it is already determined what we just discussed as a +2 score for EdgeFinder's S&P 500. So anyways, real quick, if you don't have a copy of the EdgeFinder, you want one for free, here's a chance to win a free copy of the EdgeFinder. Today is Friday. We are doing a giveaway right now on a free copy of the EdgeFinder. If you want a chance to win, maybe we can go ahead and play a quick break here, show you guys what we've got going on. We got a free Telegram giveaway going on right now. The link is in the chat. You can also scan the QR code that you see on your screen right now. And James, maybe we can just play that quick clip, show everybody what they stand to potentially win. Again, it is free to join. Check this out. How would you like to win a free copy of the EdgeFinder? Well, this month we are giving away not 1, not 2, but 3 free copies of the EdgeFinder to 3 lucky winners. That means if you join, there's a 3 times chance that you are going to be the winner of a free copy of the EdgeFinder, which is usually a $1,400 product. With the tools offered by EdgeFinder, you can track institutional positioning through the commitment of traders data or the put to call ratio to study what crowd sentiment is currently like on your favorite charts and assets. Or if you're interested in tracking macroeconomic data and how it could potentially impact things like gold, silver, commodities, currencies, and indices, check out our US economic heat map. This table allows you to see all of the major economic readings that things like the Federal Reserve are watching to set monetary policy, and these things drive trends dramatically. Or check out our economic surprise meter, which shows which currencies are stronger than others based on the economic data being released. And you can tie it all up with the top setups page that we offer within the EdgeFinder, which scans all of this data and generates bullish and bearish readings for your favorite symbols. So now that you know how awesome the EdgeFinder is and that we're giving some away for free, how do you join? Step 1 is to join our Telegram channel. We'll drop a link down below, or if you scan the QR code that you see on your screen right now, that'll take you over to the Telegram channel. That's step 1, pretty easy. Step 2 is to make sure you enter the giveaway using the form being shared in the Telegram channel. Simply fill out this form, takes about 1 minute, and your name is in the hat for a chance to win. And there is no step 3. Step 3 is, I guess, simply just wait to see if you're the winner. There's no harm in joining, so best of luck to you, and remember, 3 people will be winning, so make sure to throw your name in for a chance to win. Just to recap, step 1, join the Telegram. Step 2, drop your name in the form that can be found in the Telegram, and you're good to go. Now let's get back to trading. All right, we are back with the one and only Chris Pulver. How's it going, man?
Good morning. Happy Friday.
Happy Friday.
On farm. not.
What's the latest, Chris? We had an interesting kind of last few days. Look at this, just the daily chart this week. Just a whole barcode of back and forth. Nothing really.
Yep, that's exactly what I mentioned yesterday for the afternoon. It was just we've had 6 days of nothing, and I know that we technically have poked just poked the all-time highs. We're just not going anywhere. So I think that the market, right out of the gate with the shutdown, that dip was bought so hard, and the market I think is up. I've got one of these charts up here from the SPY. I think it's up over 1.5% or close to it. Maybe yesterday's sell-off took a little bit of that back, but pretty sure since the shutdown, the market's up over 1%. Yep. So even with the close yesterday, 1.2% or so from the shutdown. Now it's a matter of time. I think that this being the full, I guess, is what, week and a half of the shutdown. Going into next week will make 2 full weeks. There's a pay cycle on the 15th. I read yesterday that the BLS wants to still release CPI data despite the shutdown. I don't know if that can happen. I mean, I kind of hope it does, because I'm sure that I think we should be able to hear or know what inflation is, what the job report is. Some way it's like, okay, we get it. You're shut down. You guys have a file sitting around you can just send out to the mass public and let us make a decision.
Right.
So anyway, but the market's up, and that historically has been the precedent, is markets are up during the shutdown. I think no news is good news, but like you just said, nothing's really happening. We're barely poking out highs. We're not really breaking any lows. Key level to watch this week, or today rather, since it's the end of the week, is the support is at 6,700. I'm looking at my intraday levels, and I mean, we're trading around 35, either 70, 75 upside or 67 downside. If we break one of those two levels, okay, fine. But I mean, that's kind of the key resistance, the key support right now, to see if prices just stay in between. It wouldn't surprise me if we stay in between today.
Yeah, no, it's been an interesting week in the sense that, again, a lot of chop, a lot of back and forth, not a lot of economic data to go with it. And typically, we do see sort of that lack of economic data can usually cause some weird upward drift. Like we see that sometimes during the holiday weeks too, where everything's just kind of quiet and the market just defaults to just, grinding higher. And again, we've been saying this a bunch of times on stream here. We are going into that seasonality where it's a tough one to fight. Here's S&P 500 end of year seasonality, just isolated here. You can see, we were expecting something in August and September. Got nothing, right? Just went straight through it. Right. And now the trend here, at least the last 10 years, would be to expect continued positive drift in stock market, Bitcoin, gold and silver. I think have chop expectations for the rest of this year. We could just pull that up, which I think would be really healthy for the precious metals. You've had, let me just pull up, where's gold here? Here's gold. So if I look at gold, here's gold's expectation for the rest of this year would be sort of a choppy, maybe a slight pullback in gold prices. Same with silver. So kind of just an interesting end of year. If you're going off of end of year seasonality only, it would tell you to not fight it. It could, based on history, continue to grind higher here. Though, what that also tells me would be if you do get pullbacks, they look even more attractive.
Agree. I'd love still to see a pullback on gold or silver. Going sideways will make it a little bit more difficult to justify, buying at this high, because we're, essentially buying near all-time highs if we just go sideways. If we have volatility, I mean, look at GDX for gold miners. This one had a more pronounced pullback. The last couple of days has kind of been, chopping around. I would love to see, I mean, if it's possible, a double-digit pullback. A double-digit pullback would be amazing. I think it would shake out, all the leverage at the top. It would shake out some loose hands that just got in late, to chase out the chasers. But I do think that it would be viciously bought on a dip. So if we do, I mean, I'm looking at the 50-period moving average, or even the 100-period moving average. I mean, the semblance of structure here, there's nothing, man. Like this low from 25 all the way to 79. I would even say if you took this swing and cut it in half, I mean, we would be pulling back maybe between 50 and 60 bucks. I'd love for that to be an offer on gold miners here, the GDX. But I mean, I don't know. I could also see it just, hey, it's so good, it's sideways, it just consolidates, and everyone just kind of sits and buys at the high, I'm still going to stick to my plan, Nick, and just buy, little pieces of it every, maybe 2.5 to 3% lower, probably going from like highs down to like a 20% pullback. I'm going to just position for that. I also trade I'm going to post for Pulver alerts today. It's going to be CEF. Another one that I'm going to dollar cost average into. This is physical gold and silver trusts. And it's pretty inexpensive. I mean, it's $38, but I've been riding this thing since 20. So obviously it was one of those situations where I took some profit. Now I'm looking at it like I still like it. I still want it to be, benefiting from the spot prices of gold and silver. It's obviously way cheaper than trading gold. If I traded GLD at, $365, that ties up a little more cash if I want to trade options around it. But if I did CEF, I can take this thing from, pullbacks at 36 and change, 34, 32, even $30. I'll probably take a couple of dollar cost average positions in Pulver alerts today.
Like it. Chris, what do you think about Bitcoin? I'm looking at the Bitcoin daily chart here. It really is. It is sort of, in my opinion, still a leveraged play on the Nasdaq. I've said that for a long time. I don't really see. I know that the true crypto believers have hoped and prayed for crypto to kind of have this one big moment where it explodes higher when the stock market crashes. Maybe it happens someday. It would be cool to see, to be honest, to have some sort of uncorrelated risk on or sort of asset. But my best guess is that I think that if you're long Bitcoin, you are essentially doubling up your leverage on buying the S&P 500 kind of thing. But we're sitting at the highs here. We have talked about this many times. Just like gold, sitting at the highs, consolidating is usually not necessarily a super bearish thing. However, I think this is just really dependent on what happens with the stock market. But if you think stocks are going to continue, here's a way to think about this. Let's say we do get a little bit of a pullback. Let's say Bitcoin, makes a pullback alongside the stock market, maybe back down to 108. I don't know what you're currently doing with Bitcoin, but would you add some allocation to Bitcoin if the stock market had a pullback, or would you probably just stick with, the S&P?
I probably would. I'd probably throw a light position in. I'd probably go like another $1,000 or $2,000 at Bitcoin and a pullback.
Yeah.
One thing that makes me nervous. I listened to a session last night, and some of the surveys have gone out. And this could be like a Twitter survey. This could be, newsletter surveys and stuff. But the question was, plus or minus, or take the over under on a 7,000 S&P target by the end of the year. A lot of people had the over at 7,000, and I'm a little nervous because now it's we've switched from everyone thinks there's a recession, and we didn't get it. The pain trade was the market melts up. Now everyone is bullish. Truly, do you know anybody that is aggressively bullish, or I'm sorry, bearish right now? Is anybody like super bearish? No, nobody is. In fact, everyone thinks that it's like perfectly safe just to be like all in again. And so there's leverage, and look at some of the AI. It's a little frothy. I would love to see just a rattle in the market, just to shake out. Because it's crazy to think like 75-80% of sentiment is talking about a 7,000 target, which puts it around 20% for the year, which is 3 years in a row. And to have, again, you and I talked about this. I don't know if it's this week or last week. I'm going to extend my position in the VIX. I know we did. I did on November 1. I think you went out to December.
I did November and December. I've got two different. The November is not looking great, but the December is like flat right now. But
Chris, I think I'm going to go out further. I'm going to go out to like April of next year. And I think we have to have something that shakes up volatility a little bit.
Yeah. I agree. And, the thing is too, even if you don't, it's mostly about the risk to reward to me. I'm like, I think if there is, your reward is very significant. The thing that we've been talking about, I'm just scrolling back in time to some other periods that we've had really strong bull periods. Like we're looking 2012 right now. I just wanted to make this point about what you just said about, pullbacks and leverage. If we do see a melt up into 7,000 by end of the year, then the stock market this year is going to look like this. Like that's going to be the whole year's stock market performance. You're going to have just this absolute melt up towards the end to get up to 7,000. Because I don't know exactly year-to-date performance what that would look like, but it would be, probably above 25% for the year, which would be another 10% or so to go, something like that. Point being, when you get into a territory where, everyone is now bullish, like the crowd is very bullish, The reason pullbacks are healthy is because it works off, like it shrugs off the leverage in the system.
Right.
That is the beauty of a
It needs it.
pullback. Yes, it makes it more sustainable, because when you have this move, guys, like, I know there's a lot of very rational people in this stream. Everyone here, I'd like to believe, is a rational person, but there's a lot of irrational people in the markets who are chasing, and they're like, this thing's not going down. I'm going to lever up. It's not going to go down. And they just start getting crazy with it. And funds who are chasing for performance, they're trying to catch up because they missed the April move or something like that, right? What they start doing is they start taking very large leverage bets. And so these moves, what they do is it's sort of a cleanse. It's sort of like a 1 day fast for the market. It gets rid of a whole bunch of, negative stuff in the body, right? Same thing with the whole market. It's like, it's a cleanse. It's like a healthy sort of reset to shrug off some of the leverage that's in the system. The tricky thing is that when we go look at, I know we've talked about this every time we come on the stream, but it is just a lesson in history, is the 2000 stuff. When you get these moves with little to nothing, I mean, there were some sharp pullbacks here, but basically when you start just getting melt up to the right, what happens is leverage gets rewarded and gets piled on and piled on and piled on. And then all of a sudden it comes crashing down. I mean, I think that the market, Chris, I would need to go look at this closer, but prior to 99, I think the market was not ridiculously overpriced on a PE ratio until the end. The end, where the PE ratio,
it was at 98, 99 run was just like 30+% for multiple years. Yeah, it was really impressive.
Like over here you had, and I could pull up this data in just a second, just because we have it. But PE ratios were high, but then they went parabolic, and that's where you melted up into a crash. And so, if you're looking at today, I think the healthiest thing that could happen for this market, if you're a bull, give us a cleanse. Because then we can reset. People who are over leveraged can get reset a little bit, get taken out of the markets. Those are healthy things, as ugly as that sounds. Those are good things to happen. Like last year when we had that August flush, that was probably good for leverage stuff. It really reset a lot of the carry trade leverage. So that's my thoughts on it.
I agree. And there also could be the absence of that this year. This is such an odd market where did we have much of a pullback during COVID? Not really. If you go back to COVID, we had about an 8 to 10% pause right when we got back to the all-time highs, and then we proceeded much, much higher through the end of 2020 into 2021, and we didn't really roll over until November and January of 2021, 2022. I'll show you that right here. So this would be that's 2022. Here's our COVID play. We are 40% from the bottom this year. And this is, by the time we got back to all-time highs with that pullback from COVID, this was a 54% rally, get back to highs. Here's the pause I was talking about, just a little pause at those highs. We're way up here, Nick. We're quite a bit higher than the all-time highs. And it's just, little dips and pauses. Pull back to the 50 period is encouraging. We haven't hit that in 110 bars or something like that. So that's still the kind of short-term pullback I'm looking for. But we're talking about a run that went 119% before it finally rolled over. So it could be that where, I don't know. You look at it now, it's like, well, it looks kind of tame. Well, if we're going to go 100%, dude, 120% from this low, get out your, all-time high sticks, because my gosh, this would be ridiculous. We're talking like a 10,000 S&P if we're going to have that type of reflexive COVID move. We'd be close to like 10. We'd be over 10,000. That's ridiculous.
Well, and here's just to go back on my, I just wanted to show the chart that I mentioned. Here's a look at PE ratios in 1990s. You can see I'm looking at technology stocks, which were kind of the core of the story at the time. Tech stocks specifically, they weren't ridiculously priced until the end, where they in this 2000 period, they just shot up into extreme levels. And where people are, you're hearing it all over the place. Are we in a bubble? Are we in a bubble? It's everywhere now. Is because we are getting some really expensive levels and prices. It doesn't mean that stocks have to roll over right away, but is there an increased risk to getting long in these levels? I would argue yes. I think that you're playing with fire in case something cracks.
One thing I want to bring up too, take a look at this indicator S5FI. That is the number of stocks. This is a market breadth indicator. Number of stocks above the 50-day average. I think this is really interesting. We are sitting at all-time highs in the Nasdaq, in the S&P, just off of highs in the Dow and the Russell, and market breadth is not going with this. Now, there's two ways to look at this. One is we have 49.3%. We're not like 55, 60% of stocks above their 50-day moving average. Technically, that would be a nice, healthy buy zone, 49.3. So this is really a critical spot to determine, okay, this market is not supporting these all-time highs with market breadth. So this isn't the widening out that everyone's been talking about and justifying. We've seen some pushes in healthcare. We've seen some pops in energy. But it's mostly semiconductors and Mag 7. And of the Mag 7, it's not even all of them. NVIDIA is the only one that's sitting at all-time highs that looks somewhat healthy to the upside, because the other ones are at resistance or fading off those recent all-time highs. So this weakening in the market breadth going below 50 tells me that either this market again has like another market breadth thrust where everything gets bullish again into the end of the year, or we are sitting here at a very fragile spot at these all-time highs where the market is going to have some type of reset. So I know it's a crappy, like, well, if this happens, there is a coin flip, but this is a reason to be cautious, because at least having like that 5 or 10% correction because market breadth not supporting it. I mean, that's interesting on the 50-day for the S&P. If you go to the 200-day, we still have most in the buy zone, but you see how we've had like just this fading market breadth on the 50-day. If you go to the Nasdaq, only 54% of the Nasdaq is over the 50-day moving average. So it's not like wide breadth is supporting this. And if you go to the Mag 7, like I talked about, Apple overbought conditions with divergence at all-time highs. And it looked like after yesterday's close, we're kind of fading off that really quickly. Amazon, not at all-time highs. Broadcom, after that big pop, has faded off those highs. Google faded off those highs. Meta faded nicely off those highs. Microsoft still 13, 14% off those all-time highs. And NVIDIA is like the only one that still looks, it's like the chip space is still driving hard. CrowdStrike and some other ones are moving up, but NVIDIA, the chart looks healthy. We bought the dip again after we had all-time highs. So once we hit 184, pulled back to 165 or so, here we are up to 192, 193, still going. Tesla, big pullback, shy of the all-time highs. Right? Yep. So NVIDIA literally is like the one Mag 7 that looks the best as far as like still a bullish market. But we have I think all of the Mag 7 earnings this year have been responsible for about 40% of our gains. So the market year to date, let's say we're at, I don't know what year to date, we're probably like 15, 16% year to date S&P. 40% of those gains have become because of Mag 7 growth. And now Mag 7 looks like it's really concentrated into, let's go NVIDIA, let's keep going. I mean, unless we have a big Mag 7 turnaround, which leads everything else. So it is a market breadth situation where it's just kind of that same technical space of, it's fragile at the highs. There's market breadth that's not supporting this move. And I mean, we have been talking about overbought for a minute. The 50-day moving average, I'll go back to this. I think we're over 110 bars, dude, which is a lot. The biggest in history is 128. So I guess we can go a little bit longer. But from this breakout point, we are now 111 bars overextended. So that just means we haven't touched it. That's all I'm looking for. Yeah. And it's still I think it's like a 3% correction. It would be 3.3 to get it.
And Chris, I've got a, I know we keep looping on this because we are making the point, we're harping on the point that, both of us think the markets are stretched and due for a pullback, but I do want to reiterate, I know we say it over and over, that I don't think either one of us are overtly bearish on this market either.
No, I'm not even positioning for it. I'm just waiting for a dip to buy.
I've got no shorts. I've got, I guess you could make the argument that I'm being cautious because I have a cash position, but here's the thing. For me, I mean, here's my system. My system says very bullish reading on the Nasdaq, bullish on the S&P 500, bullish on Bitcoin, bullish on Dow Jones. Like for me, this is my kind of my guide. The EdgeFinder's scoring is something I hold close. Obviously, we built it. So when it comes to S&P 500 Nasdaq, though, that is a good example of like, even though my directional indication is bullish, it doesn't mean that I have to go out and buy it every single day, right? So I am looking for those pullbacks, and my bigger picture, if I was to just conclude my analysis on the S&P 500, it would be, I think it has upside and it looks really bullish, but it's overbought and I would wait for some pullbacks. That's it.
Yep. No, I agree. Yes, I think 7,000 is reachable. I'd love to see a pullback to get there first. I'd love to see a pullback that's at least bought on dip. I'd like to see a pullback in gold or silver, or at least sideways. I'm still going to position regardless. So I'm going to put dollar cost average in on CEF, GLD, SLV. I'm going to take a position on oil today as well. I think I'm going to go US oil. We're trading at $60. I'm going to see if I can do interesting play. I'm either going to do a ratio spread, or I'm going to do a back ratio spread, which gives me unlimited upside. But
so you're nibbling a little bit on oil here, Chris?
I'm going to, yeah. So the trade
Me
that I have
too.
right now,
I bought XLE yesterday.
yeah, nice, dude. I've got XLE. I've got some ratio spreads in already for XLE, XLE, XLU, XOP. I'm in, but I thought USO we're at 71. So what I'm going to try to do is, I don't know if we're going to fall back down to retest this low, but I'm looking at a trade that might offer up. It's going to look like this on the risk graph. So if I had, I guess my break even, where I put this position in, let me see if I have to go like deep in the money, but it would be a little bit of a risk valley if I have like worst case scenario, but it's unlimited upside. And I'm going to try to keep this debit less than $1,000. So if I go $1,000, and what do we have to do on oil to make this thing really pay out? Well, if oil gets back up to, these highs, then it probably pays $2,000 or $3,000. So risking one to make 2 or 3. If we get some ridiculous move where oil is, let's say oil spikes up to 90 to 100. I don't know why, but we said this this week on the shows. That's the one thing that we've been very thankful for, is that we've had low oil and we've had tame inflation. The one scary inflation spike again, which this kind of lets the genie stay out of the bottle, is that if we see higher energy prices, it's hard to contain that. And that's also led to some very rocky times in the market when oil has these big spikes and this aggressive rate of change.
Yeah, no, I think that, where we're positioned, so our hedging that we're doing, at least that's what I would call it, is kind of interesting, because what I found myself doing is I'm waiting for pullbacks in the indices, but I am long the dollar. I am long energy. I'm too early on my XLE. I'll just show you guys. I'm down $500 on it this morning here, but I went long XLE yesterday. If I get stopped out, I'll try again somewhere if I can find the right setup. So I have some long energy, which is sort of an oil proxy. If oil makes a move higher, usually XLE is going to move with it. But then we also have VIX calls. Like I've got some VIX calls out going, as we talked about, November and December for me on my X dates. So I have some hedges in place. These are not huge positions in my portfolio, but they are positions that if we were to get a little bit of a slide in some worries, right, that would sort of cover me probably in some ways in my portfolio. So at least it would be, a bit of a cushion if you were to get a pullback. If we don't, then these are small hedges. I'll just take the loss on them. But I also do think it is not a bad move in my opinion. And again, not financial advice, but my thought is I like the idea of playing for a possible VIX pop in the end of the year or going into New Year's.
Yeah, I think so. That November expiration, I did that one because it was fairly cheap, but I think the safer one for me is going out to like April, pay a little bit more, probably keep it under $500, but go unlimited upside on VIX. And if we get a spike up into, 25 or 30, maybe another volatility type event. I mean, the one thing that does happen on the VIX is it's even 2022's bear market slide for 10 months, we still had VIX spikes up into 40s. But the crazy VIX is when it's like, it just needs a ridiculous move and we go VIX from 15 to 50. That's where the VIX can help you make a lot of money, and it's still pretty darn cheap. I mean, we've been elevated, we've had higher lows in VIX, but our lows are 14.5, and our average VIX these last couple of weeks has been hovering around like 16 and 17. I'm sure a lot of that elevated VIX is because of the government shutdown and just the unknown. But our plus or minuses on the day are still very, very tight. So we're not moving a lot day to day. We're stuck between, right now we're in about a 60 to 70 point range where the floors are around 67. The recent highs, I think, were 55. We didn't go too much higher than that. That was, let's go, SPX recent highs. Yeah, 64, 65 was the high yesterday and it faded immediately. So, we're stuck. We're stuck between about a 50, 60 point range right now. I think if we break the floor at 67, I think we have room to fall. So that's just a key level to watch for this week. I think if we break 67 either today or we come into next week as we come into a pay cycle, and again, I think they're going to release CPI data, PPI data next week. I think they might push non-farm into next Friday. So if that all lines up for government comes back online or doesn't, but if we have inflation data and non-farm data for a monthly expiration cycle, that's probably going to be some volatility coming to next week, which could make things really interesting.
Yeah. Chris, do you have any plays on the dollar right now?
No, just going to wait. So I was long dollar index. I was short euro dollar going into FOMC. I am still looking to stay long Aussie dollar. I mean, this is a terrible chart to use this thing on. Let's go Aussie dollar. So Aussie dollar to me looks still pretty good to buy. It's extreme. This price looks fake to me. Like, I cannot believe we have this little volatility on the Aussie dollar. So I have been just putting in, the last time I have a position in Aussie dollar was around 64.50. I'm still holding that, and I still think that the Aussie dollar can get up to probably around like 68, 6,900. Benefiting from gold going up, benefiting from commodities, a weaker dollar. I think right now, the room up on the dollar is still valid. We're at 99.3. I think the dollar has room to get up to 100, 101, 102. As I said, I thought that a dollar strengthening would also result in a, fragile stock market. And it could. I mean, the dollar strength, if we get up to 101, 102, then stock market looks weak and maybe it has a bit of a pullback. It wouldn't surprise me if by a 101 or 102, if we get that high, that we have another aggressive fade on the dollar coming. So if you like dollar weakness, which I think it's not a bad story, but where to buy like euro dollar, I would buy euro dollar back around these moving average support levels. So here's a big fib. 1350 is a good spot, and around 1200 is a good spot. I would be willing to trade this really, really small nick. So small, and then around like the cluster of the 618, 786, because it is a channel. If it comes all the way down here, that's a big move on the dollar, but I still think we go back up. So I want to start somewhere on the euro dollar. I like euro better than pound, to be honest. So if I'm going to trade, something that's pretty high weighted in the dollar index, to be euro dollar, I think that one's pretty solid. And then Aussie dollar is kind of also a good play on China, good play on commodities, and which I still think are going to be good plays for 2026.
Okay. Well, there you go, Chris. We're out of time, and it's Friday. So, I don't get the rest of the trading session here, but thanks for coming on, for sharing some insights with us, and I hope you have a great weekend, man. Before we get kicked out of here, let me just mention, if you guys want to get access to the Pulver alerts, it's a service that we do with Chris Pulver, A1 Trading. You can see the trades being shared by Chris. You can also sign up for our VIP group as well, and you can bundle the two if you're interested. You get access to every trade that we are taking. If you want to get notified to your phone, to your Discord, whenever we take a trade, that is a service. If you want some information, speak to a member of our team. We'll drop a link here in the chat to where you can speak directly to a member of our support staff. Let them know you're watching the stream. We'll give you a discount, get you in so you can come see the Pulver alerts, get access to my trades as well. Just let them know what you're interested in, and they will help you out. Chris, thanks very much for coming on, man. Have a nice weekend.
You too, Nick. Thanks.
All right. See ya. Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing, up to 90%, and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Hello. How's everyone doing? Happy Friday. Hope you're all well. Let me know if you can hear me okay. I moved my mic around, so hopefully should be fine. Anyway, it's been a pretty good week, especially for dollar bulls. So the euro US dollar position that I've been showing you guys this week, finally closed this one out, took around 2.5% off this trade. So that's quite nice. Now, it doesn't really come from a bearish position on the dollar. It more comes from just taking profits and getting out of the market until I have a bit more of a clear view. So with the US dollar coming up to around 99.5 into the 100 to 100.5 area, I was thinking this is very likely the first area that we could see the dollar bears stepping back in. So I didn't want to deal with it. I had some good profits, and it was like, you know what? It's coming into the weekend. I'll take my profits and I'll get out. So that's that one. And we looked a little bit extended all the way down here, coming into the or breaking these lows. It just felt like it was time to book the profits and maybe look for a re-entry later down the line. I don't think there's much else. I'm still sat here in the S&P. I did add in another small position yesterday. I think it was just on this pullback here towards the 50 moving average. Nothing too interesting there. Pound Swiss remains in consolidation, but as I keep reiterating, this is a carry trade, so I don't really care what it does because I'm quite happy to just collect the swaps and just sit through whatever it is it needs to do. Beyond that, that's it. So I'm just in S&P and Pound Swiss. In terms of my watch list, is quite bare. Now, silver and gold is where my attention has been over the past 24 hours. So I put a tweet out yesterday, but mainly the problem I've got with silver is the sentiment. So I don't use Twitter really anymore at all, but when I get notifications from people that I follow, anyway, I went onto the feed and I just had a quick scroll. Everything, and I'm not joking, every single post I saw was about silver or about gold to silver ratios. I was thinking, this is a really, really bad sign. You know, I want to say it was post after post. It was literally post after post. I scrolled through maybe 30 seconds a minute and it was just full silver, gold, blah, blah, blah. Not for me. not for me. That's too much retail sentiment starting to bleed into this market. So I'm done. Now, on top of that, we have seen 4 wicks to the upside. We've also had the peace deal in the Middle East. I think that's what's actually happened. I know Trump had to go to, was it Gaza or Israel? He went to one of the 2 places. So there's something going on there regarding possible ceasefire. So obviously that leads to a bit of profit taking as well. So it just puts me in a position now where the masses are jumping into silver. They've already missed the majority of the move, in my opinion. Bearing in mind, we just hit $50, and now my timeline is filled with people looking to buy silver. That for me is a big no-no. On top of, again, the peace deal, or the ceasefire. Sorry. So yeah, silver and gold for me are absolute no-go. I'm now just waiting for any reasonable dip. So whether we come back down to this moving average, come down here, or if we start hitting key levels of 45, 44, 47, whatever it is, I'll start slowly picking up some silver. But yeah, there is nothing here for me right now. So I've managed to have a couple of sort of day trades on silver, but really nothing meaningful. I've not had any spectacular trade to show off, unfortunately. I really wish I did, but I don't. So yeah, that's pretty much all I've got. Again, it's very similar to when we had the tariff crash, and that's the comparison I used. When we saw the S&P and the stock markets in general take let's just round it off and say the 20% market crash. Well, what did we see? Well, we saw a lot of even institutions getting very worried, starting selling positions and actually placing sell positions. We saw retail investors get very worried, selling out positions. And then what happened next? Well, we had a complete reversal and made new all-time highs. I think that's kind of the similar situation we're in now, where we've got a massive retail sentiment coming into the market, and we've just hit a key level of we broke past 50 with pretty much no problem. Bearing in mind, this is 2011 high, and then we tapped into 51, and we've seen 4 rejections straight after one another. So to me, this is just screaming that it wants to pull back. I could be wrong. It could rocket now up to my 55 target, but I'm not willing to play that risk. Exactly the same thing here on gold. There is no chance that I'm going to be involved with gold at the minute. So yeah, that leaves me very, very flat on my positions right now, or my opinions on the markets, because even when it comes to the dollar, I've said this all week. So again, I apologize if I'm reiterating myself to people that have watched regularly, but I'm finding it very difficult to really come up with any decent longer term ideas just because we don't have any data coming in. So yes, we can use the CME FedWatch tool, but that's kind of all we've got. You know, there isn't really anything else to base our ideas off and to start building new ideas from, because it's just radio silence from the US. So yeah, that's the situation for me right now. Anyway, hello everyone. I apologize, I didn't read any of the chat. Let me just have a quick catch up. Recession in the US. I wouldn't say there's any signs of a recession just yet. I think there is a risk, but I wouldn't say that we're closing in on one immediately. Apparently gold and silver coin sales are down, have been down for a long time. I have no idea. I would also actually say the same kind of sentiment for the S&P. I think there's a lot of concern about it being at high prices. And I would say that, to me, is actually quite a good signal to continue buying. And when I say continue buying, I don't mean aggressively. As you can see, I've got very small positions on here. And I am trailing my stop sort of below these lows and below the 200 moving average on the H4. But I think the fact that it's at relatively high prices, you know, we're at all-time highs, and we've had such a rally to the upside. And now it's a case of, oh, well, maybe we're going to have a 10, 20% pullback or crash or whatever it may be. Obviously, you know, completely possible. However, what would really lead to that? Well, in my opinion, I don't think there's very much. Bearing in mind the ADP release, which is pretty much all we've had, was very, very bad. We've got no data from the US. And the last data we did have, again, wasn't great in terms of the labor market. The Fed is still expected to cut rates through to Q3 2026. Let me just double check that, make sure I've got that right. So we can check the interest rate projections here on the EdgeFinder. So we've got Q3 2026 here. So yes, Fed is expected to continue cutting. And again, you know, that obviously supports the indices and equities markets quite well. So I think we're pretty much set. Obviously, you know, we could of course get lower time frame pullbacks, so daily H4 moves. But even so, I would still say that's a pretty good idea to buy. Not financial advice, of course, but I think generally speaking, I wouldn't turn a bear until there's a very clear reason to, whether that be the Fed taking a hawkish pivot or a very clear resurrection in the labor market. What about yen? The yen is doomed, to be quite honest with you, I think. I was reading some bank reports yesterday, and it seems the consensus between the institutions is that the yen isn't over. You know, it's still got some hope. But realistically, does it? I don't think so, really. I mean, I wouldn't expect the Bank of Japan to start cutting rates, obviously. But I just think this whole year, there's been such an idea of the Bank of Japan hiking rates and the yen is coming back. And that's just been completely dampened over last weekend. So, you know, the only thing I could really imagine that would do any benefit for the yen right now is an intervention, which absolutely could happen. I am expecting an intervention at some point soon, because we do have dollar yen starting to get at what the MOF would say is uncomfortable levels, so above 150. So we'll see. And again, you know, the dollar is rising, so that could be more fuel for the fire in terms of an intervention idea. But honestly, I wouldn't be looking to trade yen in any way. I wouldn't want to be a seller of yen, again, in case we get that intervention, which I do think is very likely. But I wouldn't want to be a buyer of yen because I don't see any fundamental reason to be a buyer. So it's one of those markets where, on paper, short yen, long dollar yen, it makes a lot of sense. But if you look at what the risks are for that trade, I just don't think it's worth it. Yen not doomed. Prime Minister has nothing to do with the BOJ. Well, there are the independence risks as well. That was one of the other concerns regarding the yen. Dow 30 puts call ratio analysis. You don't need to put it 5 times in the chat. You can say it once and I will get to it. Where is it? Market sentiment puts call. Dow. So the Dow is actually quite flat, to be honest with you. It's right in the middle of fear and greed. Well, you know, what we would consider what we would consider fear and greed. So it wouldn't really tell me anything, to be honest with you, in terms of what you would want to do in terms of going the opposite way. There is no extreme either side. No one cares about put to call. Well, it's just, you know, if you watch retail sentiment, it's kind of the equivalent. So it depends on what you like to pay attention to. It's not something I use very often, but I do like to pay attention sometimes, depending on exactly what's going on. GU. So where is GU? There. I would expect. Now it's a bit difficult to say again, just because we've got dollar or US silence, but just from a sort of gut instinct, I would expect something like this, where we continue slightly lower, come to retest this low, maybe have some sort of pullback into the 200 moving average, intersect here, and then continue lower. Maybe something like this. And that's not necessarily from a place of dollar bullishness. That's coming also from a place of concern around the UK. We've got fiscal issues. We've got political issues. I just don't think the UK is in a great position. I don't think investors would really be comfortable holding pound or holding sterling in their portfolios, to be perfectly honest with you. So I am bearish on pound dollar overall. But again, that could completely change. It really depends what we get out of the US. Also, youngest millionaire, it's not the Bank of Japan that intervenes, it's the Ministry of Finance. But when we get interventions, they're very quickly eaten up. You know, it's a very, or typically a very short-term thing. So if we go, I can't remember when the last intervention was actually, but you will notice, if you go and find the exact dates, you will notice, again, actually, yeah, I can't remember when the last one was, but we normally have a very immediate, very aggressive move. So it'll be something like this. You know, it could be any size, and then the markets will just view this as a cheaper price to get into more carry trade positions, and they will just get eaten right back up within a day, maybe even less. So interventions aren't like a big deal. It's more just like oh God, I hope I'm not in a long position when it hits, but it can be quite a nice place to get into more long positions if you are a buyer. So yeah, that's kind of my view on it. This week was a roller coaster, done profit with $1. Well, if you've ended the week with $1, you're ahead of 90% of traders. That's one way to look at it. I want to ask, whenever I take a trade, I come in the small profit, but after that, I always exit in small profit. And then I seen I should hold more because profit. Ashwin, it sounds like you don't have confidence in your approach. So let me show you something. I was thinking about this earlier. So when I was still in this euro-dollar position at this point, I remember I was on stream with you guys and I was saying this is a really painful trade. Maybe I shouldn't have taken it, blah, blah, blah. But the reason I stayed in the trade is because I had the plan. I knew why I was in the trade, and I know I followed my strategy, and I knew I had at least, you know, maybe it wasn't a real edge, depending on exactly, you know, in terms of quant trading and stuff, but it was my edge. You know what I mean? So I was like, you know what? Just because it's in drawdown, I'm getting paid swaps to hold shorts. I still quite like the idea, so I'm going to sit. And then we hit 2.5% profit, and it's not because, you know, I could have closed it here because I was like, oh, I've just got out of a 3-day drawdown, finally seen some profit, I'm going to close it. No, and then ended up going back into drawdown, and then finally, following the plan, having patience and discipline in the trade paid off. So you've got to have that type of approach to your own trading where it's like I don't actually care what the market does. So look at it this way. Where's the thing here? So when you enter a trade, let's say you enter right here, whatever happens between this space isn't your problem. It's not your business. What happens here, that's your problem because then you've been stopped out. And this is your problem because then you hit take profit. Everything else is just the market. That's not your business, unless you're trailing stops and doing micromanagement and those types of things. But generally speaking, as a general rule, there is no reason for you to be touching trades, especially closing them early, unless you've got a solid reason to, whether it be a flip in the macro and that changes the sentiment and the reason for the trade, or whether it's a hard rule that you've got that's broken and calls for an exit. Do you know what I mean? Where do you see USD in 2026? I don't know, to be honest with you. It's difficult because there's half of me that wants to say that this trend is going to continue to the upside. We're going to continue to see these bounces and we're going to go all the way back up towards 100 or 110, 112. That's the optimist. However, considering the data and sort of the landscape we're in, it wouldn't be a surprise. Well, actually, it would be a bit of a surprise, but I wouldn't be like completely shocked if we ended up seeing something like this. We get the government reopening, NFP, unemployment, all that stuff comes out, and it's still pretty poor. We still got inflation sticky, and we start seeing concerns regarding the economy. We get the Fed cutting more rates, which is in the dot plot and expected in the SEP. So this is kind of what I actually expect. But again, the optimist in me is kind of hoping for something more like that. So we'll see. Means the guy doesn't value his time or success is just cheap. Yeah, I don't know. I suppose maybe that's one way of looking at it, but it's it's a process. I mean, a lot of new traders or a lot of less experienced traders will have the problem of closing trades early. And I get it, you know, there are times when it's necessary, but it's been able to build up the skill set and the knowledge of when you should be cutting trades early because it's no longer valid, or you should let the trade run and it's just you being impatient, all greedy. US 30, I'm fairly sure US 30 is still on the top setups. Yes, so we've still got the Dow getting a score of 8, so it does put me in a bullish bias. Whether I actually want to be involved is a different question. So I'm not going to be involved because I'm already in the S&P. If I wasn't in the S&P, I probably would be taking a long position here. And that's just because this looks like the most we're going to get, to be quite honest with you. The past 2 times, we've rejected the 50 moving average and continued higher. So it's fair to expect the same thing here. But again, we are at pretty high prices, and yes, there might be a pullback due. So if I was going to be a buyer here, stop loss would need to be underneath these lows at 46,000, give or take, and probably half a risk. I wouldn't be willing to put much money on the line really with the indices markets. Although, yes, I do think they can continue higher. That risk is still obviously a part of the game. Added to my short New Zealand US dollar position on your 15-minute strategy, worked out perfectly. Slugmeister, that's what I love to hear. WTI oil took a sell yesterday. Any thoughts? I think oil is going to continue lower. However, I need to clarify, I don't trade oil very often. It's not something I have much knowledge on. However, you know, good to see that. So this week, I've been telling you guys that it does seem like it's essentially just a sell the top type of market. You know, we've had numerous times where we've broken above these moving averages, failed to climb higher and continued lower. So I would just repeat that same approach over and over again with this market until, you know, there is a reason to be a buyer, which from my limited knowledge, I don't really have any reason to be a buyer. I think DXY will go lower after hitting 100. That seems to be common consensus. Whether it will or not is a different question. I know Nick, Chris, and myself all have very similar ideas. Well, actually, I'm not sure about Nick anymore. I know he's long the dollar, but I think Chris and I do have similar ideas about the dollar. It's like, if bears are going to step in, it seems like, I'll move my level. It seems like this is pretty much the first zone or first major zone that they are going to step in. DXY to 95. Yeah, I could see 95, especially when we get that government reopen and we start getting data again. What can be a long-term target? So I'm just using the Morgan Stanley targets, which is 1.2 right here. So I've got their position marked up. So their stop is at 1.055. They've got an entry at 1.0795 and they have a take profit at 1.12. So that's pretty much all I'm looking for. So with this market, it's at really nice lows. It's multi-year lows. However, I'm not expecting a trend change. I'm not expecting this is going to start rallying to the upside. All I'm looking for here is just a very basic, simple bounce, like what we've seen in the past when we've hit this level multiple times. It will just come up and then it will continue lower. So yeah, I'm not looking for a huge trending position. It's just a case of catching some profits, getting paid some swaps, and then I'll disappear. Because pound Swiss is a bit of an ugly market. It's not something I would normally trade, but I saw the opportunity, so I decided to take a stab. 8 more minutes until casino opens. Oh yes, we've got New York open in 6 minutes now. It'll be interesting to see what happens. Let's just see. I don't think there's really much else. Euro pound still getting a bearish reading, so let's have a quick look there. Yeah, there's not really anything going on here. Depending on, you know, your personal view, Euro pound might be an opportunity to start selling these highs because we are coming back up. I don't really see a reason to, technically speaking, and fundamentally, I'm just not 100% happy with Euro pound shorts, but, you know, there is the argument to be made. Yeah, no problem on the pound Swiss. How can I name highlight in comment section? You can't, youngest millionaire. That's down to the back end guys, the A1 team. I think if you donate, I think it does. So you could try that. You could donate some coffee money to the A1 office. Can you recheck gold? Yeah. I mean, there's not really any change from when we last looked at it. So I'm not really concerned or bothered about the short-term moves here. What I'm really looking for, you know, we could continue doing something like this for a while, but all I really want to see is a deeper retracement, and then I can start buying for the longer term. Answer, please. Answer what? How do you get a highlighted comment? I just did. But I don't think you have commented anything worth highlighting, to be honest with you. I mean that in a nice way, of course. Just joking with you. Bitcoin could be an opportunity to buy here. I'm not going to do it. I don't really like Bitcoin. I don't trade it. I don't know enough about it to warrant being a buyer. However, I can understand the argument. We're still in a bullish trend. We've created a nice little low here. It seems we do have some buyers back in. We do have a score of 5. For me, 5 isn't good enough. So that's another sign for me to not be involved. But if you're a Bitcoin bull, it might be an opportunity for you there. Thoughts on yen pairs? I don't know, to be honest. I basically said all I've got to say on yen already, but it wouldn't surprise me if we see dollar yen continue slightly higher. Then we get an intervention, we fill this gap, and then beyond that, I really need to see what's going to come out of the US, as I've said multiple times. But given the way things are right now, I think it's very likely something like that. But again, that's just anticipating we do get that intervention. We might not, you know, we might just continue higher here. Love from Bangladesh, love from the UK. Roast master? I'm not here to roast anyone. It's just, you know, Friday fun day. Have you tried volume profile? I'm going to be perfectly honest with you. Volume profile to me is subpar. There is something much more powerful than, and I'm going to make a YouTube video on this specifically, but I'm going to give you some free source here. So what you would want to do, and this is from my analyst that's just gone to London to work LSE. So what you would want to do is take the anchored VWAP and you would want to put it on the very, very open of the day. As soon as you, at the bottom, see the date change. So right here, you draw the anchored VWAP. Now, what the idea here is, obviously, depending on the market trend and apply your own analysis, it's not a blind indicator or a blind tool, but anchored VWAPs are used on trading floors. So for example, if you are a trader, you might be given a mandate by the end of the day to have X amount of euros or sell X amount of dollars or whatever the mandate might be. So what they will do is they'll figure out, or they need to figure out, how to do that at the best price. Now, of course, they don't sit there drawing support and resistance. They don't sit there looking at 200 moving average. Obviously, they do, but not for this specific task. They will use the VWAP, because the VWAP tells us what the average buy and sell level is for that day, essentially, or buy and sell price for that day is. So they will wait, or they will try to wait for price to get as close to VWAP or on the VWAP as possible. Then they will execute their orders. So London, New York, you could apply it then as well, and you know, trade around a VWAP on short time frames is much better than a volume profile, in my opinion. So in this case, you can see it has happened multiple times. Obviously, we're in a bearish trend on the 5-minute. Came to VWAP, sold. Came to VWAP, sold. VWAP projection, sold. Same again here. So it's very, very simple, but it's not something I personally do because it's just not my style. But I know some people that do use it, and it's very, very powerful, actually. Anyway. We have so much in common. Yeah. Dollar CAD buys. Yes, I mean, dollar CAD's still in the EdgeFinder. Very, very good score here of 14. The issue really with dollar CAD is that it's just a bit too high for my liking. There is no way for me to get into this market here. In theory, you know, in hindsight, I should have maybe been a buyer at this point. Once I saw consolidation, I was still bullish, but you know, hindsight's always 20/20. If we could see a deeper pullback, maybe towards these lows here at 1.39, maybe I would look to be a buyer at that point. But yeah, right now, for me personally, there is no entry. But overall, yes, I would remain a buyer. Volume profile. That's actually what I was going to say about volume profile. Is I actually don't understand why people say it's so good. I tested it and I saw nothing, and that might just be because I was using it wrong, or maybe I'm missing something. But I just didn't see any substance behind the volume profile. It kind of just seemed like, you know, maybe the market will hit that level, maybe it won't. And yeah, for me, that wasn't really good enough. That's so many moving averages. It's only 3. Got the 50, 100, and 200. I agree with you. Why don't you mix VWAP with Bollinger Bands in your strat? That is another approach. I don't really use Bollinger Bands. I use Bollinger Bands mainly when a market's overbought or oversold, in my opinion. Like I used it on gold yesterday just to see where price was relative to the 200 Bollingers on daily and weekly, but I don't actually trade from it too much unless I'm doing like a short-term DCI and Eurodollar, which I haven't done for a little while just because I've been a lot more focused on swing positions recently. When do we say trend has changed? Here. So this is the only reason I use a moving average, really. Well, one of the only reasons. So with trends, they're very easy to detect. So here we can see we've got the 200, we've got the 100, and we've got the 50, all moving down together, all above price, very, very simply. So when we see pullbacks like this and then rejections, you can use that to sell. Obviously, you know, simplified, you would need to layer it on with other things. Then during this period, we have the moving averages parallel, like train tracks. They're all just moving sideways. Indicates there's no trade, it's just a range. And then when we start seeing do this, where we've got the 200, the 50, sorry, 200, the 100, and the 50 all moving up together, that indicates we're in an uptrend. And again, once we see these bounces off these moving averages, that could be an opportunity to be a buyer. So it's very simple, and that's why I like moving averages, because it's completely objective. I'm not sat there saying, oh, this low broke that low, or there's a change of character or market structure shift or whatever all these terms are. You stick on some lines and it tells you if the trend is there or if it's changed or if there is no trend. It's just simple. It makes no sense to add new tools to your trading style. Yeah, no, I agree. My trading has always been very, very simple. It's just trend and fib. And then sometimes I'll use a breakout strategy or a scalping strategy if I'm feeling like the time, feeling like the markets require it. But yeah, not something I do really. Anyway, guys, I am going to call it a day. I'm going to call it Friday. I need to put the rest of the panels on my wall. So have a good weekend. I hope you all had a great week. What else do we say? That's about it. I don't think there's anyone on after me. So, guys, I'll see you next week. Stay safe. Enjoy your weekends. Don't get margin called. And yeah, have a good one.
You've been watching A1 Trading Live. We're here Monday through Friday, where you can tune in to hear insights from professional traders from all over the world. Make sure to subscribe for future streams. And as a reminder, if you're looking to get access to free courses, prop firm discounts, and free trading tools, head over to a1trading.com. See you next time.